making tax digital, or is it more true to say it's making tax painful? Well, that's what I think. Let's see why. Currently, you have to do one self-assessment tax return, which is submitted on the 31st of January. The reason why I say it's submitted on the 31st of January is because it's known that 85% of you, which one of you is doing this, has been submitting tax returns on the 30th or the 31st of January, not anytime sooner or soon after the 6th of April. So really, you've got to be looking at this and saying, well, how does this impact us with making tax digital? Well, simple answer is you're going to be required not to do one, but potentially 11. That's two, but 11. Does that work? No, who knows? But 11, that's incredibly crazy, right? And I'll share with you why I think it could be 11 tax returns. But let's go into the detail. Okay, so making tax digital or painful. Landlords are facing fines and losing tax relief by misunderstanding new MTD rules. That is going to be true, and it's something that this video is aiming to mitigate. I don't want to see you have these issues where you pay more taxes simply because you don't know the rules of MTD and how to navigate them. My name is Simon Misiewicz from Optimise Accountants. I help you property investors and landlords save tax whilst developing your wealth. And there's our website, so go and check that out. There's lots of free stuff that you can tap into. There is ebooks for property tax. There is a property tax course. Both may be accessed by the QR codes, and the links will be in the description box below. So landlords or property investors that want to tap into other people or services to help them build their property portfolios, there is a map now that you can go and have a look at. There's the QR code. And if you want to be on that map, if you're a property sourcer, property developer, then let me know and in the comments box below, and we'll have a discussion to see if we should add you in. The problems you face as a landlord. You're sleepwalking, not physically, clearly, but there is a digital disaster coming your way with MTD if you don't know what's going on. And it's really important for you to get a good understanding of what you need to do to avoid penalties and audits going forwards. Making tax digital. When do you need to register for MTD? Well, typically I would say that you'll be adding your gross income from self-employment and you're adding in your gross rental income. Please note I've used the word gross. This is not income as in profit. This is gross income, the money you physically receive from your tenants, money that you physically receive gross from your customers as self-employed. And you have to add those two together. And it'll be based on the previous tax return. So your requirements or the criteria for 2026 and 27 is going to be actually based on your 2025-26 tax return. Equally, the criteria for you to meet the 2027-28 filing requirements under MTD will be based on the tax return that you submit on 2026 and 27. Hopefully you follow along with that. So it's looking back one tax year because you can't really forecast what you're going to do going forwards. So if your gross income, please note, I'm going to emphasize this point quite a lot. Gross income from self-employment and your rental income, adding the two together, on your 2025-26 tax return was more than £50,000 or £50,000 or more, you will be required to do MTD in the 2026-27 tax year, starting from the 6th of April of 2026. So what if you don't have that income? Well, then you don't have to register for MTD, luckily enough. But let's imagine that in your 2026-27 tax return, your income from self-employment, adding in your rental income, is £40,000. Then that's higher than the £30,000 for the 2027-28 criteria, but that means you now need to register for MTD. So if your income is in any of those brackets, you will need to do MTD. What if though your income is lower than £20,000? Well, then you don't have to do MTD for now. If you have partnership income as well, you may not have to worry about that either. Okay, so let's have a look at the mistakes that you need to avoid as someone who is a landlord property investor. And I'm going to focus on you guys as opposed to self-employed, but self-employed may also take some information out of this as well. So the first one is ignoring MTD requirements, as we've just described. It's easy to say, well, it doesn't affect me. And some of the reasons why you may not think it affects you. You may meet the income streams, but you think, well, it's based on property income. Well, gross income, yes. But your interpretation of property income is what you get net at the end of the year. So income less your cost is your profit. That's really for you, property income. But really, they're looking for gross income, the amount that you receive. Equally, you may say, well, I've got a loss on my property income over the year, so it doesn't affect me. It still does affect you because your property gross income is higher than one of the thresholds. You may also say, well, my cumulative loss is making me a loss position for the last year as well as this year, so I don't need to do MTD. Wrong again. Unfortunately, it's based on your gross rental income. And if you're self-employed, same reason. Mistake number 2, using out-of-date record system or record keeping systems, such as spreadsheets. Now, you can use bridging software for your spreadsheets, but believe me, spreadsheets aren't really designed for this type of reporting. So you need to move to proper, that's a very good word, a better reporting system that is designed to report information to HMRC properly. So it's good to be painful, but I'm going to share with you how you can get that done for free. So don't worry too much. Let's get into the detail of some of the mistakes you can avoid. Misunderstanding mortgage interest relief. You'll notice that I've missed a T off there. That's because of my face being in the way. But failing to account for Section 24 changes as well, which means that if you don't put the numbers in the correct boxes, you could be either understating or overstating your profits, which will be used at the end of the year. I know I said about you have to be MTD for gross income, but your profits will be the one that gets taxed at the end of the year. And if you put it in the wrong box, then you will be misstating your profits, misstating therefore your tax liabilities. So you have to be careful with that. And the thing for me is to always double check. Maybe look at your previous tax return against the tax return that this thing now produces for you. Not tracking income from multiple properties separately. This is really important. There's a couple of reasons for this, why it's so important. You could have husband, wife, civil partner relationship going on where you have 100% of one property, 50% of another, 0% of a third, or anything in between. Now, the fact that you have got that split, if you don't allocate the split of that property in your software, or even does it even allow you to split the income and cost according to the split you design it to, leads to problems. So if you don't have software that allows you to split it correctly in accordance to your actual ownership, then the system doesn't work. Equally, if you don't allocate income and costs against it, then you could again be misrepresenting the income and costs overall, meaning that your tax position will be wrong. And this could then lead to more filings, investigations, penalties, etc., which could have been avoided by tracking your costs separately, which is probably more work than you're doing now, because in your spreadsheets, you may not allocate every cost item against the property. You may just say, well, it's an overhead, such as a mobile phone that you have. Well, why should I allocate it against a property? And therefore you may then choose to have a property that's called general. Okay, I know it sounds crazy, but you may have to allocate in your systems costs against a general property. Overlooking allowable expenses, missing out on tax deductions. I kind of covered that now in point 4. Some of the things you can do to avoid some of these problems is open a bank account with Metal, which is part of the NatWest group. Then tag in a free agent bookkeeping service, which, by the way, we can offer that for you. So we can actually set the whole thing up for you as a landlord property investor. And we will do that. We'll hook you up on the right systems for a minimal fee, but at least it gets you up and running. The reason why I mentioned Metal of Regent is because if you combine the two, you get free banking and free bookkeeping software as well. So that's really useful. So there you are. Some mistakes that you need to avoid using MTD as a landlord. My name is Simon Misiewicz. Why not book some time in with me using the QR code to see how we can help you?